Much of the market is slowing down right now, but these three obscure sectors are seeing a ton of institutional buying with a lot of urgency. Here to break down these three sectors and give a stock for each sector is Chris Rowe with True Market Insiders. Chris, so great to have you on the show today. I know your specialty is looking at the stocks that are seeing a lot of urgent buying from institutions right now. And this is a topic a lot of investors are really interested in, so I can't wait to get into it. And the three sectors specifically we're talking about today are not the kind of sectors most retail investors go looking for. I want to start with your thoughts on what's happening on this overall market slowdown right now.
Well, the market basically was already in sell mode. Obviously, there's Iran, and that's what everybody's focused on. So as the market's been selling off, there's just been a strong focus on energy stocks. All the other sectors have gotten pummeled. But now we're, I think, nearing the end of that, and we're seeing some life in some of these sectors. Demand is taking control of a handful of groups.
And we're going to get into those groups right now. And again, what you are always looking for is the urgency. Where is the buying actually happening? And when you see a market with a lot of red, like we've seen towards the end of this week, everyone's thinking there's no buying happening, but there is. And that is exactly what you look for. And you give out 3 stocks every week to your subscribers on your weekly 3 newsletter. It's a free newsletter. I've got the QR code here and a link in the description if you want to sign up to get on his list and get his 3 stocks a week before they take off. That's one of your specialties too, is looking for that urgent buying to catch a stock before it starts to see a run up. And that is what we are looking at today with these 3 sectors and these 3 names. So let's get to the first one. What is the first sector that you're looking at? And again, a name in an area a lot of investors probably aren't looking right now.
It's the protection, safety, and equipment sector.
So what kind of stocks might be included in that?
It's software and hardware, drones, monitoring things. In some cases, could be weapons and defense, things like that. Protection, safety, equipment is sometimes also a very happy sector because it provides safety and security in an efficient way that's kind of not intrusive and not invasive. And it's kind of a dignified way of surveillance.
Well, let's get into the stock that you are looking at in this sector as one of your favorites right now.
Yeah, I think the favorite has got to be Axon Enterprises. It's a company that most people know as Taser. They're turning policing into a AI plus data platform kind of solution. They're building kind of a full AI-driven public safety ecosystem. It's a company that's got lots and lots of government contracts, federal government and local governments. Globally, it's moving into international markets. It's still a huge, huge addressable market internationally. And they've basically built the operating system for law enforcement. So body cams, as we know, but also iCloud storage, real-time data, and now AI writing police reports.
Okay, this is really fascinating because you think about companies like this and you think about just providing the hardware like the tasers, the body cams themselves, but those body cams are collecting hours and hours and hours of footage that have to be used or turned into data in some way. And so I think that companies like this, as referring to them as more AI companies, is very smart because that makes sense that that's the next phase of kind of policing and public safety. Is there a lot of demand for that kind of service, like turning this information and the hardware more so into data that can be usable for public safety?
Yeah, absolutely. Remember how important data is. So you think about all these different companies like Facebook, and you think it's a social media company, or Google. These are data collection companies. And we're now in the age of surveillance, which is one of the reasons that protection safety equipment's one of my favorite sectors. Taser's one that's traded from the 200s about a year and change ago, where we first got the alert, up to the 800s and is now pulled back to the 400s. Yeah, it's becoming a company, if you think about all the data that's collected by law enforcement and other agencies in the age of surveillance, that makes this company a gold mine. And the fact that they do get government contracts, these are contracts that tend to stay in place for a very long time. Switching's very expensive. This is a company that's very reliable on the hardware front, but now that they're building this AI ecosystem, body cams, cloud storage, real-time data, it's becoming kind of a whole new story in and of itself.
I know this stock is one that got caught up in the software sell-off that we saw most of this year. And if you look at the chart for this one, there's so much volatility since the start of the year. It's been down a whole bunch. It's gone up again after what looked like a pretty good earnings report. So let's go into what's behind all of the movement in this stock over the last 3 months or so.
The stocks moved down with the market. In general, the stock market ran into a lot of trouble right around October 10th. There's a lot of choppiness in the market. The major averages stayed afloat float, but that's mostly mega cap tech stocks. Most stocks, majority of stocks have run into a lot of trouble, and it started several months ago. So we're kind of deep into a sell off already. The thing about Taser or Axon, whatever you want to call it, is it's pulled back not for any major reason. It's just that it got ahead of itself. It went, I guess, too far too fast from the 200s up to the 800s. You've got an international market that's barely penetrated. Latin America, Asia, they're just starting. The company basically has nothing but good news. If you look at the number of funds that have jumped into the stock, some funds got out over the last quarter. So you can see quarter by quarter how many funds step in and they're buying this stock. The stock is already sold off. And if you look at the annual earnings growth at the top here, very consistently growing. Now that they're getting into software more and AI more and international markets more, I think you're going to see probably the estimates that they already have there being raised. Funds own more than half of the stock. Yeah, just after a little bit of profit taking, really knocked the stock down to places that a lot of people were wishing the stock would go. This is a stock that just did nothing but go higher, even when the stock market had these sharp pullbacks. You look at Axon, and the stock would just be just roaring higher. So a lot of people were looking at the stock wishing for a pullback, and the market's kind of delivering that gift to investors today.
Well, let's talk about that buying coming from institutions right now. What could be the instigator for that? Like, why are we seeing that urgent buying, or why is this one showing as one that may soon be in that realm of having some urgent buying underway?
All right, two things, the technicals and the story itself. So we have algorithms that detect how urgently investors are buying stocks. And when investors are buying urgently into a stock, it's for one reason. They think that the stock's going to trade higher at a faster pace than the rest of the market. And if they're buying urgently, they're willing to pay up and push the stock higher. And our algorithms flagged Axon as the number one stock in this entire sector. It's a small sector. We only have 29 components in it, but it's the strongest. Secondly, the story, it's not about how many cops need cameras. At this point, it's how much of the entire policing workflow can Axon own for life. So it's a story that's kind of changed. One of the worst performing, if not the worst performing groups in this sell-off has been the software sector. Software stocks got hammered, and Axon is kind of started out as a protection safety equipment company and gradually morphed into that and a software stock. So you get the best of both worlds by owning the stock.
It does have some really positive analyst sentiment and some pretty good growth story there too, just from the consensus price target. So an interesting first stock to look at, not a name we've talked about recently. I know there was one other name you wanted to mention in this sector before we move on to the next two sectors and two stocks that you have for us.
I'll keep it quick because I was watching your show and I noticed that this was already just recently covered, but EVLV are the ticker symbols, and it's basically touchless security screening systems. It's AI-based touchless security. And this is what I was talking about before when I mentioned that this is the happy story in the world of surveillance. Evolve is basically trying to replace metal detectors everywhere. And it's a way bigger deal than people realize. If you think about TSA and just getting on an airplane, what a nightmare that can be versus walking into a stadium where everybody's kind of screened all at the same time. It's a very big difference in quality of life. But you have Evolve, where you see them all over the place, stadiums, schools, hospitals, all moving toward AI-powered walk-through security. No stopping, no lines. It's something that makes life a little bit easier and dignified when it comes to making sure that everybody's also safe.
Yeah, and this stock, like you said, we just had it on the channel earlier this week. In the stock chart, it's at an interesting entry point too. If you've not looked at this one before, it's really it's on a little bit of a downtrend or pulled back enough right now that it's off of its highs, and yet there's still a lot of bullish sentiment on the future for Evolve. So I
Yeah.
think this is a great time to be looking at this stock, and there's really no rhyme or reason for why the demand would have pulled back. I think that the fundamentals are still there for the company.
Yeah, I mean, I'll say this about the fundamentals. If you look at the annual estimates, they're expected to go from a decline of 19% in earnings to a positive 35% growth. If you look at the sales, they continue to grow consistently. Earnings went through a little bit of a rough patch on their estimates, which explains why the stock is down. You had some estimates lowered, but that pulled the stock back from $8 down to where it is right now, $5.96. It's very similar kind of a pullback to Axon, to what Axon experienced. But the difference here is if you look at the number of funds quarter over quarter that get into the stock, These funds don't get in and buy a couple thousand shares and get out. When this number increases, that represents the number of funds that are now in there accumulating stock over the long haul. And there's 61% of the stock is held by institutions. Every quarter, the number of funds getting into this stock has increased. I also like that management owns 11% of this company still. This is a stock that I also initially got alerted to in December of 2023. It ran up above $5 and held up above $5 for quite a while before pulling back. And you'll notice that it pulled back to pretty much exactly 5. For a full month, they tried to knock this stock below 5 and they couldn't do it. There's something special about stocks that are, when it comes to $5 a share. There's a lot of funds out there. Their statutes dictate that they're not allowed to buy stocks trading under 5. So sometimes funds will be licking their chops, wanting to buy a stock that they're not yet allowed to buy because it's under 5. The fact that this stock moved up above 5, held above 5, and you can see they're trying to keep it above 5 for a full 5 weeks, actually. Big volume coming into the stock as it launches off of this low. Yeah, I think it's a great buying opportunity down here in the 5s. Anywhere under $8 a share, I think is a great buying opportunity.
Another good name in this sector. Let's move on to the second obscure sector that we're looking at. And again, this is definitely an area that most investors aren't going to search directly for.
Well, unless they go garbage picking, they probably won't find it. It's not something that you brag about owning these stocks, but it's the pollution control sector. It's an obscure sector, but with most of the 45 sectors being sold off right now, major sell programs in the market, there are 9 standouts. And very much like the protection safety equipment sector, pollution control sector has seen demand taking control of this sector. Buy programs from funds. So in the pollution control sector, this is a Brazilian company. The symbol is SBS. And I had to actually call my wife in. She's Brazilian. I had to ask her how to pronounce it. It's Sabesp. So you have to say the P at the end like that. Sabesp.
Very nice. Well, what does the ticker here is SBS. What does this company do?
Basically, they supply water to much of Sao Paulo, which is one of the most populated parts of Brazil. One of the things that they do is they make sure that the water is clean, the water is healthy. This is one of the most, I think, simplest overlooked money stories in the entire market, let alone this sector. So it's a water infrastructure, basically, in Brazil. It's not a tiny player. It's a major, major player. The value of the company, the market cap is $20 billion. It's in an obscure sector, but it's a major company. So we're talking about the dominant utility in Sao Paulo, and that's one of the largest economies in Latin America. And international stocks as an asset class are even stronger than U.S. stocks. If you break the international stock market into 8 different regions, Latin America is by far the strongest region. So you've got a company that's in a strong sector, in a strong country, in a strong asset class.
Yeah, a lot of great points already about this one. I want to look at the chart for a little bit first. This one has a little bit more positive trend than the last one that we looked at, especially Axon and Evolve. This one, it looks like it's been doing pretty well, but analysts are still expecting it to move higher than where it's at today. What's the growth catalyst behind this? And what's your assessment of the chart looking at this right now? Do you expect it to grow even more?
I do. Like I said, it's a water infrastructure, but Brazil right now is pushing privatization and efficiency reforms. The government you get the wind at your sails when you have the government behind you. SBS is right in the middle of that shift. What it means to SBS is big growth. It means better pricing power. It means improved profit margins, and it means serious institutional money flowing into the stock. So you've got what's sort of a monopoly-like asset in this case. You have essential demand. People always pay for water. It's probably the last thing that people will cut off. And the catalyst from government reform all working together. So that combination is how slow, boring utilities turn into big winners.
Yeah. Is that part of the reason you think that we're seeing institutions kind of buying this stock more urgently right now and this entire sector? Is this kind of a move to safety, or why are we seeing more urgent buying in this sector right now?
There's also AI that affects some of these boring sectors. It's not widely discussed. It's not something that people think about. But for example, the food and beverage sector, very much like the water sector, suddenly has big growth prospects. These boring sectors that demand high scrutiny, compliance, regulations, making sure that things are safe and healthy. Those companies are actually now, with AI making things more efficient, are actually big, exciting plays. So yeah, it sounds boring, utility, water, But the efficiency reforms, potential privatization, puts SBS kind of square in the middle of a bunch of different growth trends. And it's, like I said, in the strongest stock market, Latin American stock market.
A lot of reasons to look into this one. Also interesting to see that this sector is getting a lot of urgent interest from the institutions right now. So it's something retail investors should at least look into. Chris, let's move on to that third sector where you're seeing a lot of institutional buying right now.
We're seeing lots of institutional buying in the electronics sector. It's a subsector of the tech sector. In fact, out of 45 sectors, this is ranked number 5 in terms of the level of urgency at which institutions are buying this sector.
That is what is so interesting about what you do, Chris, is you're always looking at the urgency that institutions are buying because it's a flag for what retail investors should be doing. We're going to get to the last stock that you have in this electronic sector in just a second. This last stock we're talking about today is an example of one of the stocks you alerted your subscribers to your weekly 3 newsletter about before it saw a pretty decent takeoff in the last couple of weeks. So let's talk about really quick that newsletter again. I've got a QR code here and a link in the description for anyone interested in signing up for Chris's free newsletter. Talk about what you do with the weekly 3.
Yeah, theweekly3.com. At the weekly 3, each week we give 3 stocks in sectors that are being bought with the highest level of urgency. So I just want to break that down just so you understand the importance. We've mentioned the word urgency a few times already. We have algorithms that have been automatically picking the number 1 stock or the top 3 stocks in the entire market. There's 2 steps to the algorithm. The first one is that it first finds out of the 45 sectors, the sectors being bought with the highest level of urgency. If there's urgency to buying, that means that the institution buying it is prioritizing not getting in at the best price. They're prioritizing getting their money into this stock as fast as possible. That's how stocks go up at a faster pace than the rest of the market, outperforming. So the electronics sector is ranked number 5 out of the 45 groups. But the second step for this algorithm is to then measure the level of urgency at which the stocks are being bought. And it ranks those stocks from highest level of urgency buying to lowest. And I'll say the electronics sector in particular has 115 stocks. The one stock that's ranked number 1 being bought with the highest level of urgency, Babcock and Wilcox Enterprises, BW. It continues to get hit by the same algorithm over and over again. I'm going to show you on the chart where it did jump since then, and it still ranks number 1 in terms of its urgency buying out of the 115 stocks. So the stock has popped along with the electronic sector in general, but we still think that it's a great stock up here around 1446.
We're clearly still seeing some urgent buying happening with the stock, but why is that? Why all of a sudden are we seeing institutional buyers pouring money into this name?
Well, essentially, this SIG was left for dead. It was down under $1 per share. And now it's ripping because it's tied directly to the biggest trend that nobody can ignore, power demand. There's lots of power demand for AI data centers, electrification, grid strain, security. All of it requires massive, massive energy infrastructure upgrades. And BW is not some startup company, though it was trading down around $1. It's not some, very small startup. They've been building power systems for over a century. So when you see a stock that's trading at that price, don't count it as one of these microcap stocks. Right now, they're pivoting into clean energy, waste converted to energy, and grid modernization, exactly where the money is flowing in a massive way. So what you got is a tiny stock with legacy credibility, and it's sitting right in front of what's about to be a multi-decade energy rebuild. And I think for that reason, that's why these funds are starting to pour in. Stocks that are trading down around 1446, there's only so many funds that are going to jump in. Over the last year, it went from 53 funds to 68 funds owning the stock. I think I know why. If you look down at this grid down here, you could see that the earnings growth, they just recently turned a profit for the first time. And you can see the year over year quarterly growth. So December of 25 compared to December of 24, you could see that the earnings went from decline of 73%, positive 13, positive 47, 92, up to 116, 219, 356 estimates growth on earnings. Also very attractive sales growth estimates. One of my favorite stocks anywhere, certainly my favorite stock in the sector.
A really interesting name, Chris, and one we definitely would not have looked at otherwise. So I'm so glad you came on the show today. If you are a viewer who is looking for more unique stock ideas, make sure to check out this week's 10 stocks video. There are 10 names on here that all have explosive growth potential by 2030. You can check out that video here.